The use of technology. Not only are we located in Boston, Miami, and LA, we're also the first Black internet bank or online bank. And so people can open up an account with us from anywhere in the country. And we have customers here in New York, as well as in Utah and in Denver. And, I could name cities across the country where we have customers. And so part of it is that we are now, as a community, connected through the internet. And that has been a drastic change in terms of how Black people have really viewed themselves and viewed the opportunity to bank Black and to buy Black and to do business
now,
with
each other. Now, are your standards different when it comes to, say, lending and when it comes to giving out credit cards? It would seem that that would be one way of maybe helping a community that traditionally has had a harder time getting loans.
Yep. So we do offer services that other large banks do not. As an example, about 30% of our community has a check systems record, which means that they can't open up a bank account somewhere else. And we offer a second chance checking account, so to give them another opportunity to open up an account. Or we have a secured credit card to help people rebuild their credit. So there are products that we offer that are really tailored to the needs of our community. But there's also the other side of it that a lot of people don't want to talk about. The FDIC does a study every year, and it showed that for national banks, only 1% of their lending goes to the Black community.
Right.
So we represent 14% of the population, but only 1% of their lending.
Which is funny because, buying houses and buying big things that you need a lot of loans for is something that's traditionally been sort of sold to the Black community in a very strong way.
Yes, and it's really an opportunity to build wealth, but we're not able to get the loans. Whereas when they looked at Black banks, 67% of our lending goes to the Black community. So there is a huge difference in terms of who is serving the Black community for financial services.
So when you're trying to get more interest around, you said the use of technology played a crucial part. How much of it is driven by Black millennials?
Yeah, a lot of it. It's sort of interesting because they've had recently sort of studies that have been done about how Black millennials and millennials in general are using technology and using social media. We're very big in social media, which a lot of banks have really shied away from because that's the way to get the word out to millennials. And millennials, if you think about it, I'm a baby boomer. And the technology that really came out for us was really related to spending. I mean, it's probably hard for a lot of your audience to remember when ATMs didn't exist. Remember, ATMs were, sort of created in our lifetime. And debit cards, so there are a lot of things that really helped us more conveniently spend money. Now there's technology to help people save money. And that's what millennials are doing. They are actually using technology to save money, to invest, and to recognize that they need to make their money work for them.
Terry, what is the one or two things that people come into you, because I presume you meet clients and you meet customers all the time, and say, this is a problem for us. It's not a problem in the economy at large. It is a problem. Help me.
Well, the basic thing is that the Black community really did not feel that banks were for them. Like, we have people that come to us and say, this is the first time I've been excited about banking, period. Forget what we could do with a bank, but just even be excited to feel welcomed. So that's the number one thing, is that people are starting to say, hey, banking is for me. And they walk into a branch and say, I've never been in a bank before. They could be 50, 60 years old. They're like, I've never been in a bank before. So that's number one. The second is really thinking of banking as being not just a place that you deposit your money and don't think about, but to recognize that your deposit has power. There's certain social justice movements that we've gotten involved in, whether it's Black Lives Matter, whether it's Black Money Matters. We have expressed our voice that these things are important. And so where consumers are looking, and Black consumers are looking at us and saying, my money matters. The fact that I'm putting it into whether it's a local credit union or a local community bank or a Black bank does make a difference. And so the combining of your money, your deposit, specifically in social justice, is where the millennials are coming from.
the many satisfying moments in the recent Winter Olympics, it's hard to top the U.S. women's hockey team defeating Canada in a shootout and winning the gold medal. That victory is helping the National Women's Hockey League, the first paid women's pro hockey league, shine a light on the sport and inspire the next generation of female athletes. In today's Walk the Talk, Bloomberg's ongoing conversation about diversity in the workforce, I sat down with Danny Ryland, founder and commissioner of the NWHL. And I began by asking Danny about increased demand for women's hockey following the historic win by Team USA.
I mean, it was just an amazing experience just to see those women win gold. I mean, ever since Maddie Rooney made that last save in the shootout, I mean, our players have been walking taller. There's been a great buzz around the women's game, and anytime you can have that type of TV rating, parlayed with a gold medal, I mean, just the exposure that's brought our game has been unbelievable.
Yeah, the buzz that's generated is really something else. Has sponsorship gotten easier because of it? And I wonder whether individual players, some of the stars from Team USA, will be able to get individual sponsorship deals that will then make it easier for the league to strike these deals.
Of course, I mean, anytime there's international exposure, the conversations become a lot easier with sponsors. They know about the women's game, they know some of the stars in the game, and it just kind of makes the barrier to entry a little easier because we're not introducing them to a new sport. They're already aware. So it has made our lives a little bit easier, and we expect it to continue to go in a positive direction.
Now, there's been a lot of changes since you founded the league in 2015. Among them is that two of your clubs now have the backing and the resources of NHL clubs. And I'm talking here about the Riveters, which formed a partnership with the New Jersey Devils, and the Buffalo Sabres owner bought the Buttes in Buffalo as well. Does that create imbalance with the other two teams that don't have that backing?
No, I think it actually helps us raise the bar across the league. Obviously we want our teams in the hands of the best owners and operators, and the NHL clubs do it best. So I think it's a rally cry to the other clubs to say, like, all right, let's get another deal done. So we've definitely hit our stride this upcoming season, and it's an interesting phase of the business that we're entering into.
Yeah, so the goal is to then get those other two franchises to get owners as well.
Yes, I mean, the uptick that we've seen in the two markets that have the relationship with the NHL clubs has been noteworthy, and so if we can replicate that and kind of come up with the perfect blueprint, not only with our current clubs, but potential expansion markets as well.
All right. Now, under your original plan, NWHL offered contracts of up to $26,000 a year. About 6 weeks into last season, you unexpectedly had to cut salaries by 40 to 50% to preserve the league's future. What's been the effect on player retention?
The players have actually been amazing. They understood the change. They know that we are a startup business, and that we do whatever we can for them. And they were our greatest ambassadors during that hard moment. And it was definitely difficult. It was the hardest decision that I had to make as a commissioner. But the way that they reacted, the way that they continued to be great ambassadors for the game, really spoke highly of them. And we retained almost all of our players. And then this year, we've seen a great uptick in the game as well.
What's the path forward to getting salaries back to the levels they were at?
Yeah, it's all about scale. We need to scale the business where the sports business, really scales, and that's on the sponsorship side and the media side. So having the Olympics really factor in that. Over 3 million viewers, having our All-Star game generate over 500,000 viewers on our Twitter Game of the Week. I mean, those are really the areas that really change the business. And coming with that comes an opportunity for more sponsors. And obviously, a $150,000 sponsorship is the same as selling 10,000 tickets in Buffalo. So it's really what changes the business.
That's a great way to compare it. Dunkin' Donuts was one of your first sponsors. In fact, the first. Additional sponsors didn't necessarily follow suit. Why do you think that was?
They actually signed on the second month of our very first season, so they are incredibly progressive in their thinking, and they understand that this is an opportunity. Before the Olympics, girls hockey was the second fastest growing sport in the United States, and that's not going to slow down anytime soon. And so we think that our time is now, and the sponsors are going to start to step up. And when we can show the return on investment that Dunkin' has had from the 3 years they've been with us, I think it's going to be easier for more sponsors to follow.
All right, well, let's talk about broadcasting. You stream games live on your website, I know. You also partnered with Cheddar on Sling TV, Amazon, Twitter, and Facebook Live. What kind of interest, if any, have you seen from the traditional broadcasters?
We've seen a little bit as far as highlights are concerned, but being able to broadcast our games on a linear broadcast has been a challenge. So I think as we continue to prove our product, obviously the Olympics and the viewership they saw is going to help us as well. But it kind of starts with starts with one. And so we were very fortunate to have the distribution deal with Twitter this season and covering our game of the week, and to really show them that these are the fans tuning in. This is a brand of hockey that hockey fans enjoy watching, and the more data that we can collect, the easier those conversations will become.
And the other big thing that happened over the last couple of years was that the U.S. women's national team won a big wage battle with USA Hockey. What kind of effect did that have on the NWHL? I know you supported them, but did that have a material effect on you?
Not a material effect, but the more that women's hockey can be in the headlines, and the more that these women are empowered to stand up for themselves and to get that equality, it's great for not only women's hockey, but for women's sports. So I think it had a direct impact because of that. And we were there to support them, and we always plan to do that.
And that was my conversation with Dani Ryland. She is commissioner of the National Women's Hockey League. In the fight for gender equality, there are new warriors in the halls of U.S. business schools, men. The nonprofit group Forte Foundation has been training male business students to become part of its Men as Allies program. In today's Walk the Talk, Bloomberg's ongoing conversation about diversity in the workforce, I sat down with Elisa Sangster. She is executive director of Forte, to talk about the organization's efforts to launch women into careers in business.
The business schools, each of them have established in a little bit of a different way, but they all found kind of the structure that worked for them. So the men work with the women's student group to establish this organization, and we've provided them with a toolkit. So really a step-by-step process of how to get this effectively started on your campus. They have a whole curriculum of conversations that they do in terms of programming. Some of them go out to hike a mountain and sit down and talk about these issues at the top of the mountain. Some of them go and have a small group dinner where they can actually have one-on-one guided conversations with questions that they can talk about. So it just depends on the group, and they try to do a variety of programming so that they can engage men and women who are on various ends of the spectrum into this conversation.
Based on what you've seen through your years at the Forte Foundation, do men and women have different ideas about how men can best serve as allies to women in business school?
It's a good question, and some of the things that we heard from the women, especially women who were resistant to this, were we don't need white knights, and so they didn't like the white knighting piece. They wanted the men to come in and join them side by side, but they didn't need them to come in and save the day. And for some of these organizations, that tension caused a little bit of a problem getting the organization started. But the good thing is they worked through it, they reapproached, and they came up with a better way to do it. And the men were open and interested in making these things successful, and that was helpful, I think.
In terms of numbers, what have you seen? Are we talking about 100% participation by the men, or is there a threshold at which you know that this has legs?
So I think what we're seeing is that the chapters have grown. So we've gone from a handful of chapters, 5 to 6, up to 25 right now out of our 52 partner business schools. But on each campus, they take a little bit of a different approach. Some of them are trying to get 100% of the men to sign a pledge, and then others are really looking at the population, 20, 30, 40%, who are interested in diving deep into this conversation and really making an impact in that way. So it's different depending on the campus.
Now, this initiative was introduced in 2016. Obviously, a lot has happened since 2016. What have you learned from the whole process?
That I think it's a really important conversation to be having early, and I think to start in a positive place where it's men saying we want to be supportive instead of men feeling attacked and possibly isolated from the conversation. I think what Male Allies does is give them the entree into the conversation that they need, and we do see across that spectrum that men are often interested in supporting but unsure where to start and what kind of things they should be saying and doing to be those male allies. And so that's why I think it's important to train them as early as possible.
This sounds very much like a product of its time. It can only happen at this period of time with this group of people, the millennials. To what extent do you see the same level of enthusiasm from people who are from a different demographic, an older generation, for instance?
Right. I think that they're sensitive and interested in it, and especially because many of those people are in leadership. They're hearing about it. How can we as an organization address this? How can we develop something to share within our entire corporation? But I think what's different about this is that these are young leaders who are moving into an organization, and they're saying very actively, we want a voice in this, and we have something to say, and we want you to listen. So top down is good, but it's not good enough. We want to also see bottom up and side to side conversations.
They see themselves as agents of this process.
Absolutely, absolutely.
What is the next step then? Because eventually these business school men and women will graduate, they will go into jobs or start their own companies. How do you maintain your influence from that point on?
Well, it's interesting because we have seen 3 or 4 years of graduates, and they are starting to reach back to us, and they've said, hey, I'm experiencing X, Y, and Z in the workplace, and I really think what we did in business school could easily apply in the corporate world. So over the last year, we've been collecting data from them, kind of their own experiences. We've done additional research, and we've also been talking to companies, especially if they have some kind of grassroots movement. And I do think that business school, this program is unique to business school, and I don't think you're seeing it as pervasively within a company or in the corporate structure. So these students are still taking the grassroots approach, and they're saying we think that this is the most effective way to do it. Training is important, and definitely we want our leaders to be bought in, but we think that having that conversation early is what prepares you to be the best business leader.
What kinds of companies are participants or willing participants here?
It's companies from a lot of different industries. We've seen companies in tech, in consumer packaged goods, in finance, all across the board. There are companies involved in this. Again, it's more the men who are reaching out to us in those industries. It's not necessarily the companies saying, sign us up.
That was my conversation with Elisa Sangster. She's Executive Director of the Forte Foundation. to the Me Too movement, Hollywood is in self-reflection mode about creating a safer work environment for women. There's now a website aggregating reviews from exclusively female critics. Cherry Picks is taking on male-dominated opinion sites like Rotten Tomatoes. In today's Walk the Talk, Bloomberg's ongoing conversation about diversity in the workplace, I sat down with the founder of Cherry Picks, Miranda Bailey, and I began by asking what specific need her business fulfills.
We're kind of cherry picking the female critical voice out of film, television, video games, basically anywhere where there's art criticism and media criticism, so we can have a platform to see what women think about it. In terms of women, it's very complicated because there's not that many of them on Rotten Tomatoes compared to the men. I mean, it's less than a quarter. So in order for us to us being females, to have a voice and know what females think about something, it's really hard when there's an overwhelmingly male, voice shouting at you or saying, this is how it should be.
What are the financial consequences of that gender imbalance among film critics? How does it make its way through the industry?
Well, I don't really know about financial, situation. For me, it's about the consumer. I mean, in Hollywood, we've been talking about we need more women behind the camera. We need more women's stories, more women writers, more women actors, everything like that. And I'm a film producer and actor and director, and it's really easy to say we need it, and it's a lot harder to make it happen because at the end of the day, Hollywood follows the consumers. And if the consumers are being told what is worth their money by a certain group of people that are, kind of narrow, then it's not going to open up. And I felt like, well, maybe if we can open up the critical voice, which is, the gatekeepers essentially telling people what they should buy, what's worth their money, and women actually like these stories and like these filmmakers, then I thought that would be a faster way to get more women behind the camera and more women's stories told.
How are you funding this website? You mentioned it's going to be an aggregator of reviews, but are you going to be advertising supported, subscription driven in any way?
Yes, I mean, we're funded for the next 3 years about right now by my production company, and we will be finding partners once we kind of get our our voice and our full creative image out there. But yes, I mean, we plan on doing advertising. We plan on doing partnerships with film theaters so that we can, link to buy tickets online. So like if you read a review about The Zookeeper's Wife, for instance, and you really like it, you can go right there and buy it.
It's an interesting time to be launching this because of the Me Too movement across Hollywood, across media overall. How do you intend for this site to help change the culture in movie making?
Oh, well, I mean, the Me Too movement and the Time's Up are two very different movements. I mean, they're both female-centric, but, at the end of the day, we're about, being recognized and respected. And so I'm grateful for those movements. I think it's kind of wonderful that that's happening right now. We've been saying this for a very long time, that we deserve to be paid equally, and not to be, sexually harassed. Not everyone is sexually harassed, but most all women are definitely underrepresented, underpaid, and disrespected.
You are an independent film producer. As you mentioned, you're an actor, you're a director. What kind of feedback have you gotten from peers in your industry when you told them about Cherry Picks?
I have had overwhelming support from female journalists specifically, which is very exciting for me because this is kind of a new door that I'm opening and learning about. And obviously the female filmmakers that are out there are really excited by it. We're all banding together right now and supporting each other, which I think is great. I think one thing that's awesome about the Time's Up movement is that all of the women who are directing right now are not competing with each other. We're all rooting for each other. And I think that that's a big change. And I think this Cherry Picks is part of that, is us also lifting each other up and opening it up to journalism and the consumers and what the buyers, the exhibitors, the distributors, the producers, the directors, we're all together in this, and we can all make a difference.
Cos Marte went from doing hard time to building hard bodies. He's the founder of Con Body, which is a prison-style boot camp class in New York City that employs former inmates as fitness instructors. In today's Walk the Talk, Bloomberg's ongoing conversation about diversity in the workforce, I sat down with Cos to discuss how he built Con Body from the ground up.
Con Body was derived from my prison experience. I lost 70 pounds in 6 months, and in my prison cell, after doctors told me I could probably die because of my health issues. I was extremely overweight. My cholesterol levels were through the roof, and I lost 70 pounds in 6 months, and then I helped over 20 inmates who was over 1,000 pounds combined. But I took that same programming that I was doing in the prison yard and started doing it and brought it to the streets of New York.
And you began a business, but you told me how you didn't have any startup costs and you funded this yourself. How did that work?
Yeah, I mean, I didn't have no overhead. I just went out straight to the park and started running after a woman wearing yoga pants. And I was like, hey, I got a boot camp. And I told her my story and started just attracting people to the park. I was standing on the F train, B train, making announcements. Like, I was nonstop hustling and asking, and I basically took the same skills that I used while I was selling drugs and brought them out legally.
So these are transferable skills.
Exactly.
Your workout's gotten really popular. You now have your own location. Talk about what's involved here and who goes to your workout classes.
Yeah, so what we do is hire formerly incarcerated individuals to teach our fitness classes. So we train the inmates in the system, and we're working on creating a direct pipeline from the inside out. Mostly the people that come to our classes is young professional women. Actually, a lot of people are surprised, but we don't use any equipment. A lot of guys like to, go to the gym and lift 1,000 pounds. My secret sauce is that I work with what I got. So just my body weight, small amount of space, just like I did in my prison cell. And I got that prison body you've always desired.
Now, you hire former inmates, as you mentioned. You're trying to build this pipeline. What do you look for in a potential new hire? And the extent of vetting, talk about that involved in these prospective hires.
I look for people that are charismatic, and when I conduct my interviews, I conduct them like 5:30 in the morning. So if you don't show up or you come in late, too bad. So I really try to make it strict as possible in the beginning, and then I really see if I could hang out with this person, if this person could say hi and bring a smile out of my face, not only me but the customers that are coming through the door, and really breaking down that stereotype, because we have people coming in who's never met anybody who's been incarcerated. What the perceived notion of somebody that's a so-called ex-con is that we're all killers and rapists and the worst of the worst, but the truth is that we're just all human beings that committed a mistake, and we just want to readapt back to society and get a second chance.
Your real message here is about prison reform when it comes down to it. And you kind of came up with your business plan when you were in solitary confinement. You had a lot of time to think about this. You also got some help once you established your workout class after you held it in the park. Yeah. Talk a little bit about the organizations that allowed you to bring together some of your ideas and make it a more scalable business.
Yeah, so when I came home, I tried to take advantage of every nonprofit that you could think of in the prison reform industry. So I went to Fortune Society. From Fortune Society, went to Career Gear, and all these nonprofits were helping me and just trying to get me back on my feet. But there was one program called Defy Ventures. Defy Ventures believes that illegal entrepreneurs have the transferable skills to become legal entrepreneurs. And I did that program. It was a very intense program taught by MBA, Harvard, and Stanford professors. And you graduate and you get a MBA Baylor University certificate when you graduate from the program. So they helped me put my whole business plan together and pay my taxes, and redo it legit.
Talk a little bit about your growth plans, because you're based in the Lower East Side of New York City, but you have some pretty ambitious plans.
Yeah, so I'm in the Lower East Side, in the exact same corner where I sold drugs at, where I got in trouble at, and went back into a full circle in that neighborhood. our growth is we want to open nine studios in the next 5 years. I just came out with my book, so Calm Body shows my whole secret sauce in that book. And then also we started this online platform that's coming out in a couple weeks where you can virtually work out with a formerly incarcerated individual. So you basically choose your favorite ex-con for $9 a month, and you get that prison body voice.
Diversity is in fashion. That's according to Eva Chen, who heads up fashion partnerships at Instagram. In today's Walk the Talk, Bloomberg's ongoing conversation about diversity in the workplace, I sat down with Eva Chen at the monthly Cornell Tech at Bloomberg Speaker Series, and I asked Eva how exactly inclusion is showing up on the runways.
The message is you must be inclusive, and you must kind of understand that there are billions of people on this planet, and there's not one look. I think about Instagram and some of the accounts that have done so well on Instagram, and some of the models that are coming out of it, like Ashley Graham or Paloma SLR or Halima. Like, these are women who represent beauty for a lot of different people, and that kind of cookie cutter look. There's not just one standard of beauty, it's 800 million standards of beauty. So I think that's kind of the voice. And now, you think about it, if a fashion show were to cast just one type of model or one type of woman in their runway and it was every single model looked the same, you would hear about it on Instagram. Like, people will not take that. And I think it's amazing. I think it's powerful. I think everyone can feel represented. And for me growing up, I remember not seeing anyone who looked like me or looked like us. It just didn't exist. And I think now, if you are a 15-year-old bookworm who loves to read, this is like I'm describing myself, like a bookworm who loves to read young adult fiction and drink like lemon ginger tea. You know, it's like you can find someone else, and you can find your group of people by following the hashtag Bookstagram. You know, you can find like your kind of like squad, and even if it's a digital squad, you can feel like you have other people to kind of identify with.
How is fashion able to get ahead of the curve of everyone else? Why were they able to figure this out more quickly than others?
I mean, I think in so many ways, like, you know, fashion just kind of, it's supposed to be a little bit prescient. It's supposed to be a little bit ahead of the curve. And also you're able to push the boundaries in fashion. Like, you know, like there are runway shows where people can kind of walk backwards on the runway, or they cast real life models, real life people, which is just like people, revolutionary, you know, like on the runway. And I think that you're able to take risks in fashion, and risks are appreciated.
Some risks don't pay off. I mean, I think of H&M and the controversy over a black child modeling a sweatshirt with the words "coolest monkey in the jungle." That obviously did not work. How's the feedback now from consumers different in the age of social media, where something like that will go viral in a bad way very quickly?
Yeah, I mean, I think that, listen, I don't know what the thinking was behind that specific moment, or behind that specific casting, but nowadays it's like the most important thing for corporations and companies is to have representation. Make sure that your board of directors is diverse. Make sure that the people who work in the casting department and the creative teams are diverse, because you want to be able to truly represent and truly embody. It's not enough to say, we believe in diversity. You have to have diversity. And that's, I feel very fortunate at Instagram. It's like, it is a diverse team. I love seeing and hearing the different voices and opinions and voices of dissent as well. And that's the thing with Instagram. It's like, people have opinions. You won't always agree with the opinions, but it's important that people voice their opinions. And when people see something that they think is wrong or that is wrong, like they will speak up and speak out.
Right. Do you think fashion brands are nimble enough to respond, or it's because of something like Instagram that provides that instant loop, that feedback loop, they're able to?
I think some companies are. I think it very much depends on the infrastructure of the company. And this is like, I don't know enough about like fashion corporations and infrastructure, but like if you have, I look at Gucci, for instance, and Gucci, you know, they have been known to collaborate with a lot of Instagram influencers and artists. And for the most part, 99% of the time, it's amazing. And there was one season where they did there was something on the runway that was very evocative of Dapper Dan, you know, the renowned kind of like fashion icon. And they were called out for it. And very quickly, they issued a statement saying like, you were right. And now they're collaborating with Dapper Dan and doing a whole collection together. And I think that's in part, their creative director, Alessandro, is incredibly fluent in Instagram. He's on direct messages, reaching out to illustrators, looking for fresh voices. And I think a lot of it depends on the leadership and how, I want to say woke, but like how kind of like tuned in they are to what the public consciousness is creating.
So in the early 1990s, you started selling soaps and essential oils on the streets of Harlem and Bed-Stuy to start Sundial Brands. How did you know back then that there would be a market for black hair and skincare products?
Yeah, well, because when we started, first of all, there was nobody producing natural products that were efficacious and that were designed to work on different hair textures and on different skin types. And so what you had was a consumer who desired to have healthier products, natural products, but had no access to anything that actually worked. And so, when you stand on the street corner, people tell you what they want, you better give it to them, otherwise it gets really cold, right? And so we started to take that feedback and started to incorporate that into the things that we were offering. And before you know it, we were selling to other vendors who were bringing feedback from their customers and clients. And so very quickly we got to understand just how underserved women of color were around their hair and their skin.
What has the explosion of the natural hair movement in the U.S. done for your business?
Yeah, as women became more and more empowered or empowering themselves, I should say, to wear their hair natural, to express themselves as freely as they wanted to around the things that were important to them, that really started to drive the adoption of natural hair. And then they actually had products in Shea Moisture that delivered on the promise of what they wanted, right? So I think the two worked hand in hand, and it really took off.
How does Sundial Brands stay authentic as you guys have grown?
Yeah, I mean, I think for us, we've built our business from day one on a model that we call community commerce. And what community commerce is that a business ought to invest in the community where it does business, right? And it ought to provide not just products to that community, but it also should take the dollars that it takes out of that community and put it back in. And so for us, that meant that the products that we produced from our supply chain in Ghana, of which there are 16,000 women that now supply Shea Moisture, who have now risen above the poverty line because of this model, also get to share in 10% of the revenue of the products that their ingredients go into, right? That then provides them with infrastructural support, warehousing, equipment, training, safety, health insurance, bank accounts. That's the core of what we do this for, and so we continue to do that.
And so in November, Unilever acquired Sundial Brands. What did that deal allow you to do now that you haven't been able to do before?
It enabled us to take, to commit to this $100 million fund. It's called the New Voices Fund for Women of Color, which now allows us to go create other entrepreneurs, or maybe not create, but invest in other entrepreneurs so that they too can have the type of economic opportunities that we've had. So as I said, it's not for one company or two companies alone to be able to compete and to survive and to sustain is not enough. We need thousands, right? So the first thing it allows us to do is to invest there. The second thing that it allows us to do is to scale our community commerce model so that we can go from these 16,000 women to 200,000 to 300,000 women globally. And the third thing that it allows us to do is to compete globally against global corporations. We can't compete for shelf space the same way because we don't have the same resources. We can't buy the same amount of advertising on TV or in magazines or in social media. So we end up shrinking and shrinking and shrinking as more companies come in to serve us as consumers. So what we've got to do is we've got to provide capital to each other in our communities in order to compete. We've got to find ways to scale our business. Now, the way that I've done it may not be the way for everybody else, but at least it shows a path, right? And it shows that it can be done, and it shows that you can do it and be highly successful at doing it. And it also shows that once you do it, you've got to be committed to putting it back in.
today's Walk the Talk, Bloomberg's conversation about diversity in the workforce, we're putting the spotlight on Goldman Sachs. CEO Lloyd Blankfein is reportedly planning to step down as soon as this year. Diversity will be a top priority for his heir apparent, David Solomon. Solomon recently told the Women in Corporate Leadership Initiative, quote, "You make progress, but the progress as you're looking at it day to day feels slow, and it feels slow because you're a big organization. But you know over time that will change. It's our job to change it." Joining us now to explore this topic is Bloomberg's Jordan Holman. Jordan, we know that Solomon has been pretty active on the diversity front. He did propose a number of ideas to the board not so long ago. Why aren't we seeing an increase of female representatives or executives at the senior level? Because it's not there yet.
Right. No woman has run a major Wall Street bank before. And if David Solomon does become the next CEO, that pattern will continue. So at Goldman, they are looking at increasing the number of women who come into those entry-level positions. But we're not seeing the women come out on the other side of the pipeline on those executive teams. So there is a retention issue, and they are looking at that through mentorship and sponsorship initiatives.
So how long does it take before you get sort of a critical mass of women at senior ranks? I mean, what's the sort of trajectory within Goldman to reach the upper echelons of leadership?
It definitely takes years. You know, you have to groom people. Goldman's a company where they want to hire internal candidates. An internal candidate becomes CEO. So that's why it's important to retain those women that they're bringing in. For example, this summer, they said that they'll have about 40%, mid 40% of women in their junior employee class. And so that's great, but there's only 2 women on their executive team. So now you have to, with this generation, groom them, promote them, have opportunities for them to want to stay on Wall Street.
And that takes time. I think about how Dina Powell, who was once at Goldman Sachs, went to work for the Trump White House, has come back. And there was some tension over her promotion when she returned because she was added to the management committee when her background is not in a profit-generating business.
Right. Her background's in government and philanthropy. And when you're looking for the next CEO, you're looking for those people who've been in positions of profit and loss. And she's not in that. So then when you look at the pool of women who are in that, it gets smaller and smaller. So then when it's time to select your CEO, you have nowhere to turn.
How does Goldman compare to its peers with this?
So Goldman's not alone when it comes to female representation. Citigroup and JP Morgan also have less than a quarter of women on their executive teams. So it's a conversation that needs to happen across all the banks of how do you get your first, female CEO of a large bank.
You recently talked with Goldman Sachs' former HR head, Edith Cooper, who spoke about the bank's efforts to increase diversity, women as well as minorities. What did you learn from her?
So Edith Cooper spoke on a panel last week, and she said that Goldman is looking at the data. They're really trying to be data-driven about their diversity initiatives. So if the data's not saying that they're making progress and change, like Solomon said earlier, it looks slow, then they're going to switch it up. They're going to try new initiatives.
income mutual funds run by women are outperforming funds run by men. So you would think that the number of female managers would be rising, but you'd be wrong. In today's Walk the Talk, Bloomberg's ongoing conversation about diversity in the workplace, I want to bring in Bloomberg's Liz McCormick, who's been crunching the numbers, and the numbers are kind of troubling here. Going back 15 years, Morningstar has found that women-run fixed income funds outperform by a meaningful amount.
Right. I mean, it's very interesting. They said, let's run the numbers and see, is there a performance reason why women are only 10% of the whole business? And they found no. I mean, on fixed income, women slightly outperformed. Even mixed gender teams did better. And on equities, it was fairly close. Women slightly underperformed. So the numbers didn't back it up. They said there's no performance reason why women shouldn't be rising as the number of fund managers.
And in fact, the number of women-run fixed income funds in the U.S. has dropped precipitously. It's now, what, 14 in 2017?
Right. Those exclusively run by women, there's only 14. As of September 2017, that's all there was.
In 2004, it was 47.
Yeah. So it was a big drop, you know, so it doesn't kind of make sense, you know.
So you talk to different people. What do they blame it on, or what do they attribute it to, rather?
Yeah, it's interesting. You know, I spoke to a lot of the leading fund managers who broke through and said, how'd you do it? What are the problems? A lot of them said, number one, it's very tough because we weren't always welcomed in the beginning, and you don't start as a fund manager. You have to rise to that level, so it's a long haul. And some say by the time you've fought for 30 years or so, some are like leaving and they're had enough. And others are saying young women don't know enough about it. So that's why these organizations like Girls Who Invest are trying to, you know, educate college women. Hey, this is a great field for you and you can perform.
Absolutely. Misconceptions also abound here, and I know this is something that Girls Who Invest is trying to fight as well. The idea that you have to be super quanti to run a fund. It's something that doesn't get communicated very well.
Right, exactly. I think some women think, well, maybe I could, you know, go into sales or banking or something in general, but to run a fund, you have to be just wicked smart and have to be great in math. And of course, those are great skills, but that's not all it requires. And women, it's about managing risk. Like Ann Walsh of Guggenheim said, you know, women are very savvy at managing risk, and that's especially in bonds. That's a big deal, you know?
What was her story? Because she started off on the state pension side, right?
Right, she's amazing. I mean, I said, is this right, this list of all your achievements? Yeah, she started as an accounting degree, said I just happened to go to a pension fund, and then I learned about portfolio management, and then went on to just really work hard, MBA, CFA, law degree, you name it. She had to really stack the decks, but, you know, she achieved.
All the credentials are there, and she got her break.
Yep, for sure.
1990s, Liberian native Richelieu Dennis co-founded Sundial Brands with the goal of creating natural hair and beauty products for consumers of color. In today's Walk the Talk, Bloomberg's ongoing conversation about diversity in the workforce, Jordan Holman sat down with Richelieu to talk about the rise of Sundial.
When we started, there was, first of all, there was nobody producing natural products that were efficacious and that were designed to work on different hair textures and on different skin types. And so what you had was a consumer who desired to have healthier products, natural products, but had no access to anything that actually worked. And so, you know, when you stand on the street corner, people tell you what they want. You better give it to them, otherwise it gets really cold, right? And so we started to take that feedback and started to incorporate that into the things that we were offering. And before you know it, we were selling to other vendors who were bringing feedback from their customers and clients. And so very quickly we got to understand just how underserved women of color were around their hair and their skin.
What has the explosion of the natural hair movement in the U.S. done for your business?
Yeah, as women became more and more empowered or empowering themselves, I should say, to wear their hair natural, to express themselves as freely as they wanted to around the things that were important to them, that really started to drive the adoption of natural hair. And then they actually had products in Shea Moisture that delivered on the promise of what they wanted, right? So I think the two worked hand in hand, and it really took off.
And that was Bloomberg's Jordan Holman speaking with Sundial Brands co-founder Richelieu Dennis. You can get the full interview on Bloomberg.com.
LOTOME stands for Locate, Target, and Message. LOTOME helps advertisers collect and organize their consumer data. So if you can imagine that customers engage on the phone, on the web, in a store, through a coupon, we help collect all of that, attach it to a profile, and activate it. It's the big data story. When I started the company in 2006, I saw this unbelievable opportunity around user-generated content. It changed the paradigm for all advertisers. There had to be a platform to protect the brand and get a defined result, which is a sale. That is the genesis of LOTOME. My first year in business, we landed 9 customers on a proof of concept. I then went to venture capitalists and told them the story. And over time, I was able to raise $60 million. I woke up one day in 2011, I had a board meeting. I called our board together, I told them the trends and the data points I was seeing, and we made a decision to cut the company in half and walk away from a $30 million revenue line of business. We took the company and made a huge pivot. We went from about 100 employees down to 50. There was some overlap of customers, but most of the customers were net new customers that we had to go win around a different line of business. We went from a media business that was charging on a campaign basis to a software as a service business that was charging a monthly fee to manage data. One of the key things that happened during the process was what once was just a desktop experience, meaning your computer, suddenly became a mobile device, a television, an iPad. And that is why we bought a company called Admobius in 2012, simply focused on what was called the device problem. Cross-device. In a privacy-compliant way, we were able to stitch together profiles and audiences no matter how they were engaging with the brand. We've had about 500% growth in customers since 2014. We've 10x'd our employee base over the past 5 years. We're profitable. Developing profitability in a technology company is something I'm super proud of. Over the next 5 years, I would like to be a very large public enterprise. Almost every device and almost everything we're doing is connected to the internet. Microwaves, refrigerators, automobiles. There's information that's thrown off from that device connected to that consumer. I think there's an opportunity for a public company who is only focused on data, data solutions, and activating customer data. In a world where data is everywhere, we help our customers figure out what it all means, and that's the future of LOTOME.
idea for Foley came about in 2009 when I was making a personal shift to a healthier lifestyle generally. And I realized when I was looking into nutrition and fitness that all of these beauty products actually contained a lot of toxins. I realized there was a real opportunity for a clean beauty retail store with all vetted products for safety and performance. Our entire goal is to shift the mindset around the products you apply to your skin. I needed to learn a lot about business and about the beauty industry. I worked on a lavender farm, I worked for a skincare developer, I got a quick MBA at Babson where I focused on the business plan the entire time. In 2013, we opened doors to our first store. I was in there every single day talking to customers, figuring out what this needed to be. I raised a small angel round of $750,000. That lasted us almost 3 years. All the way through to 2016, I was really focused on building a brick and mortar first business. At the same time, there was so much more going on in beauty online than there ever had been. You know, content had become so critical. We decided to make a huge shift in 2016 and change to a digital first business. We decided that digital first was really going to be the only way that we could get the content out there and we could grow fast enough to be able to share our, very unique level of expertise. So we raised a round of $3 million to do that. We needed to build a digital first team. We needed to build a new flexible tech stack. We're very lucky to be in Boston, to be surrounded by a ton of really awesome engineers and folks that are super passionate about mission-driven business as well. We spent a year and a half building it out, figuring out how Foley should exist online. So it'll be between 70 to 80% online by the end of this year. Despite building a digital first business, you can never truly replicate our in-store experience online. We have 2 brick and mortar stores right now, both in Boston. We'll be opening 4 this year. And if everything goes well, we'll open an additional 10 in 2019. We're going to continue growing content and education online in a huge, huge way. I think the real secret sauce to Foley is we are a highly curated portfolio. Since starting the business, we've tested between 800 to 900 brands. We have 75 brands in the store right now. It's not easy to get on our shelves. We don't carry any full brand portfolios. We carry what the best products are by the brand. It's helping in the repeat rates. It's helping in retention. We're now becoming known as the place to really, truly start your clean beauty journey.
Food 52 is to inspire people to eat thoughtfully and live joyfully. We are a comprehensive resource for kitchen and home enthusiasts, and that means that we offer both content and commerce, and then community is a tie that holds it all together. My co-founder, Amanda, and I both come from traditional print media backgrounds. We were editors and writers. In 2008, 2009, we saw this opportunity to create a brand around kitchen and home that lived online. We went out and got a book deal. We got a $100,000 advance, and we actually used that advance to pay for the building of the initial website. In 2009, when we launched, we started really with recipes. Then in 2010, we raised an angel round, a seed round, of $750,000, which we used to invest in building out our own e-commerce platform. E-commerce represents about 60% of our top-line revenue, and ad sales is the majority of the rest, with a very small bit being cookbook sales. The majority of our advertising is native advertising and branded content. The events are also a key part of all of our lines of business. We do a lot of events with brands on the ad sales side, and then we have our own events on the commerce side, often pop-ups where we're showcasing our products, which you can typically only buy online. Last year, during Cyber Weekend, we had an outage where the company that calculates our sales tax was down for over 12 hours. So we had just a total backup. What we decided to do was to remove the sales tax functionality completely from the checkout process so that orders could get through, and turn it to our advantage by actually making it a promotion. We followed up with an email the next day, and we said to everyone, we will cover the sales tax through the rest of this weekend. When you have a community that you really are talking so directly with all the time, it enables us to have that sort of direct conversation with people via email, via the site. This is what we're going to do. We're going to turn it around to your advantage because you're that important to us. Right now, we are touching 12 million people on a monthly basis. Our unique visitor growth has been 65% over the past year. We're talking to Amazon Alexa about a partnership. Something we talk about all the time is, what does a Food 52 presence look like offline, a permanent brick and mortar presence? We're very close to profitability, and it is really one of our key focuses for the next 18 months is to become a sustainable business.
Sweet Green, we make every single thing from scratch in store every day. The three of us were just, you know, what if we opened this restaurant? It was just solving a problem that we had in our own life. This problem of wanting to eat something that was healthy, affordable, convenient, and really stood for something that we believed in. We started the company by going out to anyone who we could ask, and we raised about $300,000. 40 people contributed to that very first restaurant. That means the average check was somewhere between $5,000 and $10,000. The place we found to open was tiny. And what that did was it really forced us to simplify everything. And that philosophy has really stuck with us throughout the whole history of the company. It wasn't that sales took off in a crazy way right away, but it was like the people who knew about us loved us. Very soon after we opened the first one, we started exploring the idea of a second and a third one. Our first 7 restaurants, we stayed in the DC area. We had these huge ambitions, but we knew we had to get things right before we scaled it. We've had to raise a lot of capital along the way because we build restaurants, but we never really took on any sort of institutional funding or any big investors. It was about 4 years ago, one of our customers and friends approached us about investing a lot more money. It was a guy named Steve Case. He really believed in our mission. That kind of funding allowed us to invest in people, invest in the community, invest in the systems and infrastructure, allowed us to build a brand. We invested in mobile technology and also rebuilt our restaurants in a responsive way. You can pick up your phone or go online and within just a few clicks, order it, have it on a shelf ready, come pick it up and be out of there. That was really hard. It was more than just building an app. Everything had to be redone. The way we operate, our kitchen systems, our prep, everything we did had to be rethought because all of a sudden it went from like one restaurant, one engine to 2. It took us about 2 years to build that technology. You know, I think sometimes the easy way is not the right way. Instead of resisting it, embrace it, and figure out a way to do it the right way, not just the cheap way, easy way. Today we're open across the country in 8 cities. So we're in DC, Philadelphia, Baltimore, New York, Boston, Chicago, LA, and the Bay Area. In 2017, we'll end the year with 85 restaurants. For the next 10 years, we're focused on not only just building restaurants, but building technology that can make it easier for customers to interact and eat healthy. We always say we want to meet customers where they are.
The idea for Swell really was I wanted to create a better looking water bottle that would convert people to actually carrying a water bottle everywhere that they went, to stop using those plastic water bottles. I started Swell with my own personal savings. I invested $30,000. I worked with a team of industrial engineers. The Swell bottle is triple-walled stainless steel with a layer of copper on the inside. It's almost indestructible. The first year when I started Swell, I went to 17 trade shows myself. I stood in a lot of booths and I talked to a lot of customers.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
Well, it's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
From New York City, for our viewers worldwide, I'm Taylor Briggs, and for Jonathan Farrow, the countdown to the open starts right now. And we are 30 minutes until the opening bell this morning. It is a risk-on day. It was Monday that we crossed above 3,400 for the first time. We are eagerly approaching a 3,500 on the S&P 500 as we have a new regime in the Federal Reserve keeping rates at zero for the foreseeable future. That means we are getting further lift up in yields, 73 basis points on the 10-year, a 152 on those 30 years, as break-evens also are rising. And we begin with the big issue, investors debating the market implications of a policy shift at the Fed.
Low rates are going to be with us for a lot more. A very long time. Beyond will recover.
Low rates, near zero rates, forever and a day.
The Fed has come a long way in the last couple of months.
There's no doubt that the Fed, I think, wants a little bit of a steeper yield curve.
It is an important shift. Rates, are staying low for a very long time. It takes that uncertainty out of the equation for investors.
All they would be doing would be codifying what was already their reaction function.
The Fed recognizes that negative rates or yield curve targeting.
That's a high-class problem to have right now.
Those new techniques that are being used elsewhere have mixed reviews.
They haven't gone there yet.
To the extent that they're going to let inflation run a little higher.
Having undershot inflation for so long.
We're going to let the economy run hot.
It would be no surprise if we saw yields further out on the yield curve at the 10-year point and further move higher from here.
Joining me now is Bloomberg's Scarlett Fu. Scarlett, my favorite quote of that is rates are at zero for forever and a day.
Forever and a day, yeah. As far out as you can see, Taylor. For the equity and bond market, the read-through here is that the central bank to the world, the Federal Reserve, has just clarified that lower rates for longer can easily be lower rates forever if need be. So that was a green light for risk-taking and curve steepening. Laura Cooper, who writes for our MLive blog, put it best. She's called it a Powell after party. And you're seeing it in equities with futures up after the S&P 500 briefly rose above 3,500 yesterday. Since late March, Fed accommodation has been the big driver for stocks. The Fed's balance sheet expansion may have slowed down, but stocks continue to hit new highs thanks to gains in big tech. Gina Martin-Adams of Bloomberg Intelligence writes that Powell's shift should actually calm worries about narrow market breadth because banks will start to get a lift. Now, with the Fed making clear that it's ready to tolerate an inflation overshoot, Treasuries sold off yesterday, especially on the long end. Yields are easing off a little bit today, but spreads, the 2s, 10s, the 5-year, 30-year, are still at their widest since early June. In FX, Powell's dovish shift was largely priced in. The U.S. dollar actually came off a 2-year low yesterday, but if you look at it today, it is tumbling. Mainly because Shinzo Abe, the Japanese prime minister, made a surprise announcement that he is going to be resigning. That sent the yen firmer versus the dollar resuming its long-term decline. And of course, an inverse relationship with the dollar is gold. It's getting a lift today, but the main catalyst for gold is negative real rates, bond yields that are below zero after accounting for inflation. And you can see the relationship pretty clearly here, Taylor. As we've seen real rates stabilize since, August 10th or so, the gold rally has started to stall out as well. Taylor?
Bloomberg's Scarlett Fu, thank you as always. And Victoria Fernandez of Crossmark saying bets on higher inflation might be short-lived. She's writing, quote, inflation expectations have moved slightly higher over the last couple of weeks, but much of this is due to short-term price movements because of COVID-19 issues. And we expect that as these issues get worked out, prices will moderate. And Victoria joins us now. Victoria, did any of those comments change for you yesterday after Powell spoke?
Well, I don't think we had a large shift in our thinking because of what happened, at least in the sense of inflation. I mean, we know that inflation is having a really tough time getting back up towards that 2% level. It hasn't been up there for years. And so it wasn't a big surprise that they're having this average inflation targeting now as new policy with the Federal Reserve. The employment component of what they were talking about, I think, was a little bit more of a shock. But looking at these inflation numbers, we've seen food prices go higher. Obviously, that's not a surprise when we've had supply chain issues during COVID-19, and we've had the strong demand when it comes to necessities and at grocery stores. We've seen those stocks actually perform well because of all the demand there. And we've also seen some of the pricing move higher in the latest numbers when it comes to hotels, when it comes to airlines. So a lot of this, I think, is as we begin to open back up, we're going to see a spike in prices. But as we continue through the COVID recovery, through the end of the year into the beginning of next year, I think we might see some of those prices moderate. Now, that doesn't mean that longer-term inflation expectations don't go higher. As we sit here and realize that the Fed is going to stay lower for longer, as you said, forever and a day, it seems like that we might have these low rates. So not that there's not pressure on the long end, but I don't think it's going to be something that's imminent. I think it's going to be longer term, and we'll see fluctuations as some of these short-term issues work their way out.
How are you thinking then about this new era on the long end with the 10-year at 73, 75 basis points, a 30-year hitting 150? Are we in a new trading range, or over time those come back down if we're at QE infinity forever?
Right. I think the question, Taylor, is going to be when we have that September meeting, does the Fed come out then at that point and say they're going to implement something more of a QE? Are they going to start buying bonds on the longer end of the curve. We know that that yield cap control probably isn't something that they're going to implement at this point in time. But when we have such large issuance coming out of the Treasury, we've got to assume that as the Fed's balance sheet has come down a little bit from some of the dollar funding issues working their way through things since beginning of April or so, that is the Fed going to start buying longer on that curve? And if so, that's going to keep the rates lower. This 70, 75 basis points on the 10-year was a little bit of a resistance level, and we're trading right within that range right now. The next level is going to be around 90 basis points. So we'll be watching to see if we hit that level, if there's enough risk on in the market to see that, or as we get closer to the election, does volatility pick up, which we've seen in the futures markets, and push those rates higher?
Victoria, you mentioned something very interesting, which is the QE, right, and the Fed coming in September. And I'm also thinking about deficit financing and the cost at which we are financing the debt for all of our deficits. Is there a risk or an opportunity that the Fed comes in and lowers or caps those long-end rates because we have to issue debt to fund our deficit financing?
That's kind of the push and pull argument that we see right now on these rates. I mean, obviously, if they come in and they start buying, that's going to keep a lid on those longer rates, and that benefits the extreme amount of issuance that we're seeing. Now, however, if we don't get a large stimulus bill coming into play, if we don't get another large CARES Act that comes in, and, that's in question right now, as we start to see the COVID recovery happen, how much is going to be needed, perhaps we get a little pullback on the fiscal stimulus that we see. And if that's true, then maybe we don't need as much buying on the long end from the Fed in order to keep those rates low. So I think it's going to be a wait and see on that. We actually have a little bit of a shorter duration play on our fixed income portfolios right now because we do expect rates to go a little bit higher. But again, that 90 basis points resistance level, I think, is key, and I'm not sure we'll breach that anytime soon.
And we go down the credit scale from a full faith in credit to investment grade and the high yield, many of which the Fed has also dipped their toes in the last few months. Investment grade spreads on our Bloomberg index down to a 130 over treasuries, high yield down to just a 477 basis points over treasuries. Has the Fed come out basically and said we no longer tolerate prudent investing? You just buy everything and you search for yield in any areas of credit in which you can find it?
Well, the Fed may be saying that. We are definitely not saying that with our clients. We take a little bit more of a conservative approach when it comes to our fixed income investments. That's what our clients look for us for in that space. And so we focus more on that investment grade space. Saying that, it does make it more difficult right now as we've seen spreads come in and we still have treasuries rates so low. The dollar price has really made it tough to find a good buy and generates a good yield to maturity. So you really have to look carefully, and you've got to take that credit component into account. We are not dipping down the credit curve into high yield at this point in time. We still think that's a little bit risky. Yields are so tight right now. Spreads have come in so tight on those. We anticipate that if we see the Fed continue to do support, but that volatility comes back in because of the election, we could see spreads widen out a little bit. So we still feel investment grade is the best place to be in the fixed income markets.
What about just buying equities? The courage to invest further at these record highs may seem daunting, but if we're at rates for forever and a day at zero, do we all just pile then into the equity markets?
Well, we're seeing that already, right? We're seeing it especially in that secular growth area and that tech area. We were buying in this area earlier in the year. We've actually started trimming some of those names and looking for other opportunities, more in kind of the value or in the cyclical component. Even in some of the financials like JP Morgan, we bought into Walmart, we bought into McCormick. So we think there's an opportunity to get into some of those areas of the equity market that perhaps weren't doing as well and trim some names in some of those larger growthy components, because we do think with rates this low, that's going to continue to be a tailwind for the equity markets.
And those financials specifically, I've heard very different calls on this, Victoria. On one end, rates at zero is healthy in terms of extending credit to the consumer, extending credit in terms of mortgages and car loans, and yet you need a steeper yield curve to be profitable. And you did earlier in the segment highlight the risk of a QE coming in and capping those high-end rates. How then are the banks more profitable now than maybe they were before if we are still at zero?
Well, we know the banks are in a much better position from their balance sheets now than they were back in 2008 and 2009. But if we look at the earnings from last quarter, banks were really making a lot of their profits on the trading component, and I would anticipate that we're going to continue to see that into the end of the year. Obviously, a steeper yield curve is going to be positive for the banks, and they're going to want to see that. And we have gotten quite a bit steeper in the last week or so, but we're still underweight financials. JP Morgan to us is one of the best of the banks, so we want a little bit of exposure, and we feel with the management team there and the strong balance sheets that they have, that that's where we want to have that exposure. But we still are underweight and feel like they have a long path ahead of them, but the steeper yield curve is definitely going to help them going forward.
Finally here, how are you thinking about small caps? I know it's hard when you get some of these big tech, big cap names leading, and in the last few years, the Russell 2000 has been one of the bigger underperformers, and yet today finally getting a lift. Is this a boost for some of these domestically focused names?
It definitely is a boost for them, but I think along with that, a lot of it is the COVID recovery efforts that we're seeing. We're starting to see the numbers look better here in the United States. I'm here in Texas, and these Sunbelt states that where we had some spikes a few weeks back are doing much better. Hospitalizations are down. Things are starting to open up a little bit. We've seen movie theaters open up over the past week, which I didn't think would happen so soon. So I think small caps are benefiting from that as well. But then you get that lower cost of capital with these lower rates for them. That's definitely going to help their balance sheets going forward and give them a little more foundation to perform better. So that's why I think we're seeing the Russell 2000 perform better over the last couple days.
Victoria Fernandez, thank you for joining us. And coming up, we are checking in on the state of that U.S. recovery. Chen Aya, Morgan Stanley chief economist and global head of economics, he joins us next. And in the markets, it is an everything rally. We're buying equities, we're buying bonds, we're buying gold, we're buying credit. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market, it's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Europe does, as you say, have some catching up to do on that front. So we are expecting to see a little bit of strength coming through at the start of trade. How long will it last, though? The perennial question.
We've put ourselves on the front foot again by adapting all the company, by resizing, by adjusting production rates, by adapting the supply chain as well to this new difficult environment.
We had a pretty robust rebound through mid-June. We saw some stalling after June, and I would say in the last 2 or 3 weeks, all our high-frequency indicators, mobility, engagement indices are improved, are firming. And so we're rebounding. We are not rebounding as much as we would have if we had the virus under better control, but we're still rebounding.
some cautious optimism about the trajectory of the U.S. economy from Dallas Fed President Robert Kaplan. And for more, let's bring in the man who did that great interview, Michael McKee, Bloomberg International Economics and Policy Correspondent. And Mike, much more of a focus perhaps on the labor market than inflation.
Yes, at this point, they're keeping an eye on the labor market. That fits with their new focus on the labor market as part of their framework. But right now, no progress on labor. We saw 1 million jobless claims yesterday, and today we get income and spending numbers that really back up what President Kaplan said. Income's up 0.4. That's better than the June number of a 1.1% decline. But if you look, wages and salaries rising at a slower pace. Farm income got a big boost in June from Trump payments to farmers for tariff relief, but we're way down in July. And look at unemployment. Down 7.2%. This is partly a base effect because unemployment didn't keep going up. It's also partly that some people came off of the continuing unemployment rolls, but this is before the $600 unemployment bonus went away. So it does show you that we're going to probably see another big drop in August. Spending also restrained after jumping 6.2% in June. It rose only 1.9% in July. Durable goods, non-durables all at a much lower pace. We'd seen retail sales slow down some. Services is the number we don't get in the retail sales numbers, and you can see the slowdown there. So in the income and spending category, Rob Kaplan was right, things have slowed down. The other number everybody watches out of this is the PCE deflator, Personal Consumption Expenditures Index. That's the Fed's favorite index, and it was up by 0.3% on the month, pulling the annual rate to 1%. So we are nowhere near the Fed's 2% target, let alone the idea that it could go over it. And Taylor, one more quick number for you today. The advanced trade balance out at $79.3 billion is the second largest trade deficit ever on a monthly basis. December 18 was just a little bit bigger. Imports and exports both up 11.8%, but imports are a much bigger dollar value than exports. This is going to weigh on growth in the quarter as well.
Yeah, great roundup of the eco data and those great interviews that you're doing with those Fed presidents. Michael McKee, thank you. I want to bring in Chet Naya, Morgan Stanley chief economist and global head of economics. How are you thinking about this new shift that we got yesterday? Much more of a focus now on these labor markets and letting inflation go at the expense of that.
I think it was a historic moment as far as the Fed policy making is concerned. If you look at the trend in the U.S. inflation in the previous cycle, twice we had inflation reaching around 2%, and at the same time we had the fiscal and monetary tightening happening, which was not helpful to taking inflation about 2%. So I think this is a historic moment where we are now going to let the inflation go about 2%. And mind you, we've been writing about the overall inflation story from a medium-term perspective, and I've been on the show talking about that we do need a use of active fiscal policy, and that is also happening in this cycle. So a combination of accommodative Fed policy and aggressive use of fiscal policy, we think will make sure that we get that inflation about 2% in this cycle.
Are we getting good inflation, though?
Well, we are. I mean, I think if it's more, when you're talking about medium term, yes, right now we have some supply issues, and which is why inflation is going up a bit more. But when you think about inflation outlook beyond the near term, in 2021 and in 2022, it will be somewhat of a larger share of good inflation because we are talking about it being driven by aggregate demand being strong with accommodative fiscal and monetary policy.
You know, it's interesting. Nothing actually changed yesterday, right? Nothing in the inflation data came out all of a sudden yesterday and said inflation's rising or the labor market's improving. And yet so much of this is the signaling of the Fed, as you have alluded to. Break-evens at a 175. Is this exactly what the Fed was trying to do with just signaling?
Well, I think, yeah, it's important, but it's not signaling just to the markets, but also to the real economic agents and the economic constituents, right? Which is what Chair Powell indicated, that, you know, the longer you stay below 2% and you average below 2%, the inflation expectations of the real economy agents will also be shaped that way. So it's working on the real economic agents too, not just the markets.
Chetan, is interesting. When Michael McKee did that interview with Robert Kaplan of the Dallas Fed, he said there is some concern about dollar weakness that puts some pressure on commodities, that affects the tip markets, which then affects break-evens. Do you see inflation, or are there some concern within the break-evens that there's more of a liquidity premium priced in, as Mike appropriately asked the Fed president?
Well, I think that's part of the plan, right? If the Fed is taking up a more accommodative stance and real rates decline, that's going to result into weaker dollar. That's exactly the thesis our global macro strategist Matt Hornback has, and that's his reason for being bearish on the dollar. But it's also going to the Fed's advantage in helping them to get that inflation about 2%. So I think at this point of time, it's kind of an endogenous action. I don't think it is yet at a stage which kind of worries the Fed for them to be sort of thinking about that to be a negative in the overall framework of managing inflation dynamics.
How do you still see a V-shaped recovery, and do you?
We do. In fact, I think now we have more and more evidence on that front, right? So, I mean, today's data, I know that's showing a slowing of consumption spending, but we have now overall personal consumption spending down just about, close to 5% from pre-COVID levels. So we've made significant strides towards that pre-COVID levels in terms of output. And that has been our core thesis, that we will get to pre-COVID levels of output both on the consumption side as well as on GDP much faster than what we had seen during GFC. And I think the other point which is important to note is that you are also seeing a more broad-based improvement in the economic activity. It is not just, the work from home sectors. We're now seeing restaurant activity, for example, as Robert Kaplan was mentioning, that we have seen improvement in the economic activity. It's primarily in the, in the sectors other than work from home. So we are seeing a more broad-based recovery right now.
Chetan, thank you, as always, there for your thoughts. And stay with us, because coming up, it is time for those morning calls, the analyst action that you need to know. It's all coming up next. And later, Citigroup's Chief Global Equity Strategist, Robert Buckland, joins us for the opening bell. And as we head to break, BOE Governor Andrew Bailey currently speaking at day 2 of that virtual Jackson Hole Symposium. You can watch it on your terminal at Live Go. Some of those comments all about the Bank of England has plenty of firepower left, including negative rates if needed. This is Bloomberg.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
This is Countdown to the Open. I'm Taylor Riggs in for Jonathan Farrow. Time now for the morning calls. A look at some of the analyst recommendations on Wall Street this morning. First up, RBC upgrading Dell to an outperform with an $80 price target. The analyst citing the prospect of Dell spinning off its stake in VMware, unlocking value that would be too big to ignore. Next up, Morgan Stanley downgrading DraftKings to equal weight with a $37 price target. The analyst pointing to the company's valuation after doubling in share price this year alone. And finally, Bank of America upgrading the Gap to neutral with an $18 price target. The analyst citing a quicker return to pre-pandemic sales growth levels. And coming up, Robert Buckland, Citigroup's Chief Global Equity Strategist, joins us for the opening bell. That conversation coming up next. Meanwhile, just a few minutes away from the opening bell, it is a buy everything rally. We are higher on equities, we are higher on bonds, we are tighter on spreads, but we are a little bit weaker on the dollar. This is Bloomberg.
Some things you see coming, some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
The Boston Symphony Orchestra presents BSO at Home, a collection of concerts, at-home lessons, and behind-the-scenes stories to enjoy while you stay at home. Learn more at bso.org/at-home.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This This is Countdown to the Open. I'm Taylor Riggs in for Jonathan Farrow, just moments away from the start of trading, and we can thank Powell for that Powell shift. It is a buy everything rally. Though tech underperforming the Dow and the S&Ps, we extend 9 points, trying to reach up to a 3,500. Remember, we just crossed 3,400 for the first time on Monday. You flip up the board, interesting story within the bond markets. Big lift up in some of the inflationary trades yesterday. Bonds, though, catching a bid. We're coming back down 3 basis points to a 73, rolling over on the 30-year from a 152 to a 149. But crude continuing to catch a bid as you're getting further dollar weakness. Let's head on over now to the markets desk. Bloomberg's Abigail Doolittle has stocks moving at the open.
Indeed we do, Taylor. Let's take a look at a number of stocks moving to the upside in line with this morning's bullish start. Abbott is popping once again, up 2.1% after rising 8% yesterday. Its best day since March 24th in the market low. This on the news this morning that the U.S. has bought out the entire supply of the rapid COVID test kits that caused the stock to soar yesterday. Specifically, they're buying 150 million kits for $750 million. The test does not require lab equipment, basically a 15-minute turnaround time. Coca-Cola also higher on their reorganization plan. This includes 4,000 voluntary separations that will cost between $350 and $550 million, and they are also cutting 17 operating units down to 9. Now, Walmart, yesterday's big story, higher once again after Walmart closed up more than 5% on the news that they're joining Microsoft in a bid for TikTok. Some of this could have to do with wanting to really boost their advertising or presence to consumers. Also, TikTok is the second biggest market is in India. Walmart wants more presence in India, so that could be a piece of it as well. And then Goldman Sachs up about 0.5%. They have agreed upon a $2.5 billion payment to Malaysia over the 1MDB scandal. That overhang is gone. As for some earnings movers, Taylor, lots of good news here as well. Ulta Beauty really soaring, up 13%. Second quarter comps beat the estimate, are improving. July comps fell just 10% after the 37% fall in May, and August is single digits, so investors encouraged by the fact that that's moving in the right direction. Workday, they put up a very strong quarter. This software company, different than the software that CRM offers or Salesforce.com, but you can see this trend of software doing very well during the pandemic. Those shares up 14%. Same deal for Dell, up 4.5%. Very strong quarter as the pandemic has raised PC demand from both students and workers. And rounding it out, HP up almost 1%. Their sales beat the estimate. So lots of good news here for some tech movers relative to earnings, Taylor.
Abigail Doolittle, thank you. Now the Fed's pivot, boosting bond yields, but failing to put a dent in that equity rally that Abigail just mentioned. Bank of America's Jared Woodard saying that the shift could allow other sectors to take the lead.
The Fed's probably going to be a little bit more tolerant of increases in wages and wage inflation in the future. I think that's a good thing for markets. It's a good thing especially for cyclical sectors of the economy. You can see much more upside opportunity for really cyclical sectors like financials and industrials, and that's actually precisely the sectors you can see rallying.
Academy's Peter Cheer echoing those sentiments, making the case for weaker tech. Quote, higher yields will put pressure on the NASDAQ 100. It won't hurt other sectors and should even help financials. And Bloomberg's Scarlett Fu joins us with more. And you're seeing that a little bit, Scarlett. Yesterday, tech, and today, the big underperformer, I should say.
Yeah, that's a good point. The question here is who wins and who loses from the Fed's policy shift. And that's making a lot of assumptions because it's assuming that the Fed can achieve faster economic growth that's marked by fuller employment and higher inflation as well. And that's an open question because 2% has been a target, a challenging target for the central bank. Now, in equities, winners are groups that benefit from higher yields and are linked to inflation and marked by a stronger underlying economy. Yesterday, we saw food stores do better. Victoria Fernandez pointed out earlier that if there's anywhere we've seen price increases, it's been at the grocery stores. Certainly, they've seen increased demand and supply chain issues that have lifted prices. Banks, of course, getting a lift from rising bond yields and steepening yield curves. Real estate also firmer. On the downside, you can see tech hardware and semiconductors. So technology and the different subsectors there. Of course, they've been the clear outperformers in the market since late March, and they could decline as the market rally broadens out. So they're kind of relative losers. When you look at the banks, though, let's focus on that because yesterday, all 24 members of the KBW Bank Index rallied at least 1%. And you can see that they're holding on to those gains today. The key for banks and lenders is higher yields on the long end. They make money by borrowing on the short end and lending out on the long end. That spread is their net interest margin, the profitability of their loans. It's their bread and butter, and especially for plain vanilla banks that rely on loans, commercial and industrial loans and individual loans, that's where they make their money, and that's what they're looking at, Taylor.
Yep, Scarlett Fu on the great rotation, and Seema Shah, principal investors, seeing room for that cyclical rotation to take hold, writing, quote, if the reason for the upward rise is stronger economic outlook, equities should still perform well, as you'd likely see a rotation from defensives to cyclicals, from growth to value, which would uphold the equity performance. Robert Buckland of Citigroup joins us now. Robert, where are you on the great rotation?
I'm a bit selective. I think as potentially inflation expectations rise, I do think it is good for cyclical stocks. But we've got to remember that part of the message we were getting from central banks, or have been getting from central banks and the Fed yesterday, was about not allowing interest rates to go up that much. So I would rather buy the inflation plays than the interest rate plays. So I'd rather buy mining stocks than financial stocks.
So curious, though, how does the market continue to move higher? And I know that the Fed is all in, though. If growth continues to lead the gain and value is further left behind, you need to see more of a broadening participation, though, to really confirm the rally.
Yeah, I think we can see some rotation out of, as you've already said, out of defensives into more cyclical stocks. But I don't see financials as being cyclicals paramount. I see them being much more as being rate-sensitive stocks. That's the part of the value bucket that I'm suspicious about buying. I don't mind buying industrials or mining or some commodity stocks and things like that. Financials, I'm a little bit more wary on.
I'm curious how you're thinking long-term about some of the asset bubbles that we continue to talk about. Equities are at a high, and I know that is your world of equities, and yet we're also folding in some rate analysis, and bonds are also catching a bid. Are you worried about asset bubbles if rates are at zero truly for another 5 years?
Yeah, of course, we all are. We're all seeing valuations heading towards the levels of the late 90s, early 2000, and we all know what happened after that. However, the giant difference this time around is that back then, bond yields were 5%, 6%, 7%. Right now, they're 0 to 1%. So it's almost like, what else are you going to do apart from buy equities? They look expensive, but relative to other asset classes, they still look reasonable value.
And Robert, are you also too in the camp of so much of the move up in equities is, of course, based on that discount rate, as Mike Wilson of Morgan Stanley has alluded to, that if that denominator and the discount rate of discounting those future values is zero, it inflates present value. Is that really what this equity rally has been based on?
Yeah, I think it is. And effectively what central banks have done is stopped us having a bear market that we would probably have had if it was just earnings driving share prices. It does worry me that sometime in the future, if central banks make a suggestion they're going to take this cheap money away, we could have our bear market then. So we've got awful earnings at the moment, but the stock markets are going up. I think in the future sometime we could have good earnings, but stock markets could go down because central banks would see that as the opportunity to withdraw cheap money.
How are you viewing technology? Calls for narrowness of this rally, wanting to see more broadening, as of course the NASDAQ underperforms just a little bit yesterday and today.
I mean, I'm a big fan of old stock market sayings, and one of the oldest ones of all is that bull markets narrow. So it doesn't surprise me that as the markets make new highs, that it's the same old trades leading the way. I think that as we move into the future, the real rotation will occur when this cheap money is taken away. And kind of what the Fed was saying yesterday is that they're in no great rush to do that.
Is the consumer healthy enough to continue to fuel credit sectors, lending, borrowing, you name it?
Well, one of the things that worries us all is that whenever we have a problem in the world economy, there's only one solution, which is to pump more cheap money out there to try and get people to borrow more money, to get out there and consume more. There has to be a day of reckoning out there sometime over the next 10, 20 years, but I just don't think it's over the next 10 or 20 days.
You are global. Let me end on a global note. Does further dollar weakness, you just automatically assume some outperformance of international and emerging markets?
Yeah, we've been pointing clients towards emerging market equities. They're cheap. They're the classic play on a weaker dollar. So right now we're overweight emerging markets to play that weaker dollar theme, and that trade's working fine right now.
Yeah, seems like it. Robert Buckland, thank you as always. Let's head back on over to the markets desk. Abigail Doolittle joining us now with some other movers. Abigail.
Taylor, more upside movers to talk about, this time really related to the consumer, because of course we had some of those consumer numbers come in, spending numbers come in much better than expected for the month of July, up 1.9% versus the estimate of up 1.6%. That's the third straight monthly gain in a row, and the last month was revised up to 6.2% from 5.9%. So good news on the consumer. It seems that Americans are out spending a little bit more than expected. On this, we have a bunch of consumer names popping. Nordstrom up 1.2%. In addition, their annual anniversary sale is going on right now. Toll Brothers is higher. Lots of positive home data this week, housing data this week as well. Carnival up 1.2%. Ada Cruises, which is a part of Carnival, will be offering cruises this fall and winter. And Delta off of its highs, but still higher. It seems as though investors and traders are hoping that Americans will be getting back out there spending more money, as they have been over the last couple of months, Taylor.
The reopening trade, you see it there with the green on the screen. Abigail, thank you. And coming up, President Donald Trump closing out the Republican National Convention, making the case for his reelection. That conversation coming up next. In the markets, well, I might be a broken record, but it's a buy everything rally. We are extending record gains on the S&P, on tech, even though tech is the slight underperformer. Now, of course, the big outperformer. Surprise, surprise. We're buying full faith and credit. We're buying high yield. We are not buying the dollar. This is Bloomberg.
You see coming, some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
President Trump making his case for a second term in his acceptance speech for the official Republican nomination.
I will cut taxes even further for hardworking moms and dads. I will not raise taxes. I will cut them, and very substantially. We will impose tariffs on any company that leaves America to produce jobs overseas. We will make sure our companies and jobs stay in our country. Together we are unstoppable. Together we are unbeatable.
Bloomberg's Kevin Cirilli joins us now from D.C. The three T's: Trump, taxes, and tariffs. Kevin.
Yes, exactly. In terms of the domestic policy on the economy, the president looking to tie nominee Biden to Democratic socialists on the left. He promised more tax cuts, including the payroll tax cut, and more deregulation. Look no further than what the SEC did on accredited investors earlier this week. But on foreign policy, he sought to portray Biden as someone with deep ties to Beijing. Take a listen to what he said.
China would own our country if Joe Biden got elected. I will hold them fully accountable for the tragedy that they caused all over the world. We will go right after China.
The president pushing China front and center of this campaign. I do want to note, Taylor, quickly that Biden said yesterday to campaign donors that he is looking forward to getting back on the campaign trail in the coming weeks in key battleground states at rallies that he says will comply with CDC guidelines.
Kevin, it's really a long 2 weeks, so thank you for staying awake for us further this morning. I want to bring back in Bloomberg's Abigail Doolittle for more on what another term could mean for the markets. Abigail, feels like a push-pull here between lower taxes but then higher tariffs.
Yes, indeed, Taylor. And I think that taxes is probably one of the factors that's showing in terms of President Trump and the possibility of winning another term. Because in the polls, as we know, he's down against candidate Joe Biden, pretty significantly. However, nobody's counting him out considering the fact that President Trump put up that surprise win of the Electoral College back in 2016. So relative to taxes, this is super interesting. What we're looking at in orange is an index of highly taxed companies. In white, we're looking at Deutsche Bank's low tax companies. And you can see over the last couple of months, the basket of highly taxed companies is climbing. Now, if President Trump does win, he, of course, has had in place a tax cut from 2017. Joe Biden is proposing a big tax increase, about $3.5 trillion overall, 28% for corporations. President Trump last night saying he's going to cut taxes even more. The fact that you have high tax companies outperforming suggests that maybe some investors think that President Trump once again will pull out a surprise win. But whoever wins, Taylor, what we are promised is volatility. If we go into the Bloomberg terminal and take a look at the VIX curve, we are going to see investors expect for markets to get a little bit shaky going into the election. What we're looking at here in blue is the September VIX contract. The VIX, as you know, the quote-unquote fear index at 27. Currently, spot VIX is at about 25. For October, we're looking at 30. November, we're looking at 32. The levels are even higher for the VXN, not on the futures, but the actual VXN of the NASDAQ 100. So some market watchers that I talk to on Options Insight each day, they think the big volatility could come from the tech engine that's just been going. And then finally, if we take a look at currencies, probably less to do with the RNC or the election, but we have some big moves here. We see the Bloomberg dollar index down about 0.7%. This, Taylor, probably has more to do with its pairing against two other currencies. We see that the yen is climbing sharply. That probably on Abe's resignation, perhaps the idea that somebody less accommodative might come in. And then the euro is also climbing. So I think that we have the dollar down more so as a move around those other currencies. And the fact that you have the euro up, that's pretty risk on, that growth currency.
Yeah, smart. Bloomberg's Abigail Doolittle. And the dollar, as we just mentioned, resuming its downward trend after Japan's Prime Minister Shinzo Abe announced he's stepping down. JP Morgan expecting the yen to hit 100 versus the dollar if a Biden win follows Abe's resignation. They're writing, quote, his long tenure has helped stabilize the economy while bringing relative calm to the Japan-U.S. relationship with Trump. So a change in leadership would be a source of instability. This could initially inspire some yen buying and beef up speculative pressure from overseas for the yen to appreciate. And Aaron Kennan of Clear Harbor Asset Management joins us now. Aaron, how are you thinking about this? And really, is this more of a dollar weakness move here?
I think it's a bit of both, Taylor. Clearly, Abe has been, trying to weaken the yen over the course of his tenure as prime minister through Abenomics, and of course, BOJ Governor Kuroda's extraordinarily accommodative policies. And so you have that, sort of a question mark now. We think, generally speaking, the party will remain in place. And that those policies, both fiscal and monetary, will remain in place. We think the bigger story really is on the U.S. side, where, frankly, I think the Fed recognizes they need to weaken the dollar. It's the elephant in the room that they can't talk about publicly. And their actions yesterday, which have been sort of choreographed now for many months, over a year, may have come maybe a month early, but certainly is probably a weak dollar decision on the part of the Fed. We would expect that to continue. You can see that playing out in commodity prices, the price of gold, base materials. And with the steepening of the curve yesterday, you also saw that playing out and maybe a little bit of rotation from the growthier segments of the market into financials. We don't think that'll hold per se, but that's what we've noticed.
Aaron, talk to me about the economics behind a weaker dollar, the impact on some of the domestic small cap stocks, the exporters. Are you importing higher inflation? How does this play out in the world of some of the international and domestic stocks?
Well, sure. I mean, if you have a weaker dollar, you're able to sell and compete your goods and services overseas much more effectively. And in the midst of this extraordinary economic crisis here in the U.S. and around the world, but particularly pronounced here with 32% quarterly decline in growth year over year, the Fed's trying to put out all stops to try to stimulate this recovery. But let's put this maybe in a broader context too, to your point, which is the Fed has not been able to achieve its targets for the last 15 years, and so this is a rather significant shift moving away from targeting to averaging. But yes, I think that the ultimate outcome will be a weaker dollar for the U.S. And of course, the dollar doesn't move in isolation of U.S. policy; it moves in relative response to other policies. And we're seeing huge fiscal stimulus coming out of Europe, Taylor, unprecedented and unexpected up until about a month ago, with Germany on board. And this could provide another stimulus for the euro relative to the dollar. And so certainly some companies that are doing lots of business overseas would incrementally benefit from not only the weakness in the dollar, but the incremental strength on the demand side.
Is gold at $19.55 an ounce an appropriate store of value?
Well, we're looking at, I think the answer is yes. And I think gold still has legs here, particularly if you believe in a weaker dollar. And if you believe that central banks will continue printing money. The U.S. Central Bank has increased its balance sheet by over 80% year-over-year growth, and we're going to increase it by another $1 trillion, from 7 to 8 trillion, just between now and year end. The European Central Bank, a similar trend line. The Bank of Japan, a similar trend line. And so I think the gold trade can work well. We view gold as an alternative currency, full stop. It's just not a fiat currency. And so in the midst of money central bank printing, we think gold has a reasonable legs here on a go-forward basis.
What is the biggest risk to this market, given volatility rising just a little bit, but nowhere near the levels of volatility we typically see in August?
Right. I mean, you have the election coming up, and you have, I think a lot of hope embedded in the market here that there's some sort of V-shaped economic recovery. I think it's from a definition perspective, we can't see a V-shaped economic recovery, even though we've seen a V-shaped equity recovery, because the duration has already passed that would have allowed for the V to occur. So at best, we'll have a check mark, and I think the risk to that check mark being higher sloped, more positive and more negative, will be predicated on how the central banks are able to stimulate activity, how confidence can shift, and how the COVID virus can dissipate or reoccur, which will impact consumer habits quite significantly going forward. But as it pertains to the market, there's been a huge bifurcation in performance. As you know, last year we had all sectors up, and this year you have a huge bifurcation where technology is roaring ahead, and you have energy and financials really underperforming. And that's quite noticeable. We think capital-like companies that are very managed here, that have clean balance sheets and where management are really great capital allocators, will continue to perform well. And that's one reason why we see technology performing so well here.
Right. Yep. The trade of the day of the year, pretty much. Aaron Kennan, thank you. And coming up, the market moving events that you need to be watching. It's next in our trading diary. This is Bloomberg.
true diversification. That's what adding commodities exposure to your stock and bond portfolio can help provide. The Bloomberg Commodity Index is the standard for commodity market exposure. 23 traded commodities are represented: agriculture, livestock, metals, and energy. The Bloomberg Commodity Index is the benchmark most widely used by investment professionals globally. Track your commodity investments with a proven financial information partner. The Bloomberg Commodity Index. True diversification.
This is a step in the right direction. Perhaps it's a harbinger for more changes in the future, like the completion of the banking union.
This is Bloomberg's The Open. I'm Taylor Riggs, and for Jonathan Farrell, let's take a look at the trading diary because it is a big week. What you need to be watching at the top of the hour, we're going to get University of Michigan sentiment survey, President Trump delivering remarks this evening, a slew of Fed speak next week led by Vice Chairman Richard Clarida, and on Friday, the main event, U.S. payrolls report closing out the week. It is a big week. We've had the best week on the S&P since July 3rd. The best week in tech since July 31. This is Bloomberg.
We are above forecasts. 1,800,000 jobs is the total non-farm payrolls, with 17,000 additional jobs added in terms of net revisions.
We still got 1.8 million with a big decline, almost a full percentage point drop in the unemployment rate, which will move to single digits easily in the summer and fall.
Leading up to this data, there was a lot of reason to suggest that the pace of increase had slowed. And in fact, what we see in this data is, of course, it has slowed. But the good news is that it is continuing. And it is continuing despite some slowdowns that we're seeing around the country as a result of an increase in cases.
People tend to focus on the growth rate. The big issue is the depressed level of spending and income in the economy, which is reflected in the level of the unemployment rate of around 10%.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging. We feel like we can maybe help people out more.
We have an enormous number of big ideas.
I do double down on helping other Black founders, whether it's fundraising, hiring, growth, product, whatever it is that they need.
Months after Hurricane Maria,
Puerto Rico is still in peril. Huge swaths of the island are still without power, running water, or access to medical care. Experts estimate that it will take years before these services are restored island-wide. Much of the blame has been placed on FEMA for a slow response in comparison to recent disasters on the mainland. But recovery from a disaster of this complexity and scale has proven more challenging than anyone anticipated. And filling the gaps between an overextended public sector and a suffering populace falls on the private citizens. Robert Anderson is a Puerto Rico resident of 4 years.
The eye of the storm came in south of El Yunque, swept up towards San Juan, and out to Arecibo. Everything on the right-hand side is what we call the dirty side of the storm.
This isn't his first time in a disaster zone. With a military and telecom background, Anderson worked on repairing damaged cell phone towers in New Orleans after Hurricane Katrina. Some might be tempted to label him a disaster capitalist, seeking lucrative government contracts for his expertise. But as Anderson finds himself in the middle of a humanitarian crisis, he and his associates are developing a variety of pro bono recovery projects that target the island's hardest hit areas.
I see two Puerto Ricos. We're here in San Juan. They have telecommunications restored. They may or may not have power, but basic services are in place. They're able to get food. They're able to buy things. They're surviving. And when you look outside of the San Juan area, you can go 15 minutes from here and find areas that are devastated. I'm working on the devastated side.
Today, he's put together a boots-on-the-ground mission to provide medical care to some of the island's most isolated and vulnerable residents. Steve Berenbaum is one of Anderson's business associates. He offered an extra car and a set of hands.
So we received an initial report from a nurse that was out in the area. We're headed to the northeast region of Utuado for some people that are in need of urgent medical assistance.
Dr. Sally Priester is a physician from San Juan. She filled a van with medical supplies at her own expense and brought along a team of nurses. Google Maps estimated our first destination to be a 90-minute drive. But it didn't account for obstacles like this. Our first stop was the home of an 82-year-old blind Vietnam veteran. His roof was blown off by the storm, and he's been living alone in a back shed for nearly 2 months.
His cane actually got broken in the storm, so he's limited mobility. He has a number of medical ailments. Dr. Priester's having a look at him. We called the VA. They're going to get him set up with what he needs, get him stabilized so he can then be transported either to an evacuation center or off the island. It's when the chain gets broken, when those families that are connected to them leave the island or take off, these guys get left at the end of the road, and it's tough.
FEMA was not officially part of Robert's team, and their arrival caught everyone by surprise. Their job here was to survey and report back to their superiors, and did not come with medical aid of any kind.
People think that FEMA is there to hand out bottles of water. It's not what they do. FEMA has a role to play. They have a very specific role. They bring in ships, they bring in airplanes, they bring in tractor trailers with pallets of things. But they're a big machine, and there's gaps in that thing. And you're seeing one of the gaps here, and we help fill that role. These guys are in a bad situation before, and now they're struggling for real basic things. One of the risks that you run is people going from fear to hopelessness. Those are the folks that we're trying to reach.
And how are they reached? How are they even found?
Word of mouth, mostly.
And what's your role in all this?
Ghost in the machine. I'm lucky enough to be able to communicate with folks in FEMA, the state of Puerto Rico.
For a ghost, Robert makes his presence well known. Not only was he the de facto leader of the mission, now with FEMA in tow, he created his own maps to survey storm damage.
So we're right here.
And delivered them to FEMA HQ free of charge.
I have pretty good reach.
Perhaps that's how he managed to earn himself a coveted FEMA badge without actually working for them. And it's these relationships that allow him to operate more efficiently than an NGO or a government agency.
We're able to resolve problems at a different level.
Our Our next stop was on a mountaintop, a family of 11 struggling to care for their special needs brother in what was left of their house.
Probably we are the first health team to come and visit this family.
Muy bien, todo muy bien.
The patient has Down syndrome. He is all day in bed. The difficulty with this is the patient cannot be alone. The most important thing is that you need to take care of the chronic disease besides disability, because they have been not going to a doctor, and no doctor has come in here yet.
So we need a refill of this medication.
After maybe 54 days, it's not getting better. And the only way that you can be able to see that is coming to the ground, drive, and see the people and talk to the people.
You can see San Juan from here, but you can't get there. It's like the Emerald City.
On this stop, we caught word that a man living alone at the edge of the jungle was in need of care.
So we decided to take a little detour, come up here and check out and see what's going on. One of the challenges is to find those people that are at the end of these roads that need help.
¿Pero por qué estás solo? ¿Por qué estás por acá tan solo? I'm asking about why he's alone right here. He said things of life happens. Yeah, I'm here by myself.
So ¿dónde vive acá? En la parte de...
This is not a job. If you do this, you need to have passion for what you can do. You're not going to get paid.
It's said in disaster response and emergency response that the real first responders are your neighbors. You don't need to wait for a lucrative FEMA contract to go out and do good and to help the community.
In the end, do you feel like you're making a difference?
Lives you touch and people that you can affect. I don't really think about it in those terms.
But why do you do it?
It helps me sleep at night. I think it's as much for the people that are going out to help and do things as it is for the people that you affect.
Whether out of altruism, or the lure of a paid gig, or some mixture of the two, Anderson hopes to stay here to help shape Puerto Rico's future.
Puerto Rico's essentially been a colony for 400 years. It was treated poorly by the Spanish. It was not treated well by the United States when they first got here. Puerto Rico can continue in the way that it's always been, or Puerto Rico can rebuild itself like nothing that's ever been. And we have to do everything we can to make that real. That's the bottom line.
When I met him first online, I found him to be really sweet. I think I was the one who was talking for an hour. He was just listening.
When we met, I saw her. She was beautiful, intelligent, and kind, which was, something that I was looking for.
Anshu and Sumit are one of about 12 million couples that get married in India every year. Unlike their parents' generation, they're not from two close villages, but from two cities on opposite sides of the country. And their love didn't start through community matchmaking, marriage brokers, or classified ads in newspapers, but began online.
So we met through jeevansati.com. So it's basically an online portal where we have detailed profile of different grooms and brides.
It makes a lot of remote profiles who are located in distant areas more accessible.
Thanks to growing internet and smartphone usage, matrimony websites and apps in India are starting to disrupt the matchmaking industry. More and more people are finding their partners at the click of a mouse. jeevansati.com, where Anshu and Sumit met, is one of the biggest players. Young Indians looking for love set up profiles including their caste and horoscope, but their criteria for choosing spouses appears to be changing.
We have seen the shift from traditional caste community conservative parameters to something like which is more focused on education, employment.
Anshu and Sumit's marriage was initiated by their parents, but modern Indian couples like them have more input than previous generations.
We looked up to them to agree for the proposal, but it was primarily our decision that we wanted to be with each other.
So what's the emoji you use the most to send to each other?
There's a bear which basically we use for indicating a hug.
Yeah, that's our language basically. Bear icon for a hug.
Time flies when you're in love, and just 1.5 months after they first met online, the couple got engaged. They decided to hold their wedding less than 3 months later. But planning a traditional Hindu wedding on such short notice is no easy task. The massive event usually lasts 3 days, has various ceremonies and celebrations, and involves the entire two families and hundreds of guests. Luckily, there are websites and apps for that.
We searched online, we got in touch with Wedding Brigade, and they helped us finalize the venue. And it makes the search faster and efficient.
Startups like the Wedding Brigade are challenging traditional wedding planners in this $50 billion industry. It provides various services from booking banquet venues to buying wedding gowns. The website makes money by charging commission from vendors.
People don't want to be limited to what is available around them. They want to know the entire range of options available before making a decision. And now it's easy to find almost everything on one portal.
Anshu and Sumit are officially married in a ritual that has gone on for thousands of years, but their love started in a very new way. Technologies might be changing the way couples meet, date, and get married in India, but they're definitely not changing everything.
The technology was only the first level help that we could get to find each other. Everything else was like very humanly and emotions and feelings based.
Massachusetts Senator Elizabeth Warren has become a symbol of everything the Republican Party stands against.
Everyone gets a right to basic health care. We need strong oversight of these banks.
A legal scholar and a consumer advocate turned politician, Warren has branded herself as a champion of the working class and made a career out of standing up to big business. While rumors of a 2020 presidency bid remain just that,
I'm not running for president.
her Senate seat is up for re-election in 2018, and Republicans are already pumping millions into super PACs to defeat her. This is the story of how a law professor and politician came to be seen as the biggest threat to Republican values and the greatest hope for progressive America. Elizabeth Warren was born Elizabeth Ann Herron, the youngest of 3 siblings, on June 22, 1949, in Oklahoma City to middle-class parents. After waiting tables to help her family pay the bills, Warren became a star on the high school debate team. She landed a scholarship to George Washington University at the age of 16, but 2 years later dropped out to marry her high school sweetheart, Jim Warren. By 1980, Warren was a mother of 2, divorced and remarried, had earned a bachelor's degree from the University of Houston, a juris degree from Rutgers, and practicing law in New Jersey. Warren then went on to become an influential law professor, teaching, lecturing, and publishing highly cited work on bankruptcy and commercial law at 7 universities around the country, eventually settling at Harvard Law School. But Warren wasn't always a liberal lion.
Elizabeth Warren used to be a Republican, actually.
That's Stephen Dennis.
I'm a Senate reporter for Bloomberg. Around the time that Elizabeth Warren switched parties, she became a fierce opponent of a Republican drive to make it much harder to file for bankruptcy. She fought that for a decade. It ended up passing anyways.
While her efforts ultimately failed, her warning calls were heard in 2008.
We're in the midst of a serious financial crisis. Our entire economy is in danger, and without immediate action by Congress, America could slip into a financial panic, and a distressing scenario would unfold.
Professor Warren was tapped to help with oversight in the government bailout.
She would excoriate bankers and their bonuses and their practices.
Why should the U.S. taxpayer alone carry Citi?
She proposed a series of tough regulations, which became the basis for much of the Dodd-Frank financial law that we have today. That sort of catapulted her to national stardom, particularly among the progressive left.
Encouraged by her newfound notoriety, Warren declared her bid for the U.S. Senate on September 14, 2011. During the race, her opponent Scott Brown tried to derail Warren by accusing her of falsely claiming Native American heritage, a controversy that earned her the nickname Pocahontas. Nevertheless, she was victorious and won the Senate seat by a comfortable margin. She used her new tenure to challenge everyone, from banking regulators and Treasury officials to members of Wall Street and Congress.
I'm really concerned that too big to fail has become too big for trial. We need tough new laws to hold corporate executives personally accountable. No one should be above the law.
She called for Wells Fargo CEO John Stump to resign for fraud, introduced the Bank on Student Loans Fairness Act, and reintroduced the 21st Century Glass-Steagall Act. In 2016, after staying silent during the Democratic primary battle, Warren finally endorsed Hillary Clinton and had some harsh words for candidate Trump.
Donald Trump is a loud, nasty, thin-skinned fraud who has never risked anything for anyone, and that is just one of the many reasons he will never be president of the United States.
But she was wrong.
The forgotten men and women of our country will be forgotten no longer.
Warren wasted no time resisting Trump's agenda.
Have you ever managed or overseen a $1 trillion loan program?
I have not.
How about a $1 billion loan program?
I have not.
In the Donald Trump era, Elizabeth Warren has been playing defense and trying to prevent Donald Trump and his cabinet appointees from rolling back protections that she helped enact.
Warren actually found herself rebuked by Mitch McConnell for reading a letter by Coretta Scott King about Jeff Sessions' record on racism during his confirmation.
She was warned. She was given an explanation. Nevertheless, she persisted.
That moment became something that's on T-shirts, bumper stickers, slogans, and that really galvanized a lot of support for her. It's been very hard for Republicans to get much of anything done this year, and that's at least in part to this resistance movement that Elizabeth Warren has helped champion.
We are here to fight back.
Enough of Elizabeth Warren. Like you,
millions of dollars are being funneled to defeat Warren in the midterm elections in 2018. But it's the rumors of a 2020 presidential bid that has further prompted powerful donors to fund her opposition, often using the same playbook of constant and ruthless ad campaigns that many believe helped Trump win in 2016. It's anyone's guess if she will endure what Hillary could not.
You know, the question for Elizabeth Warren is whether she can go from being a liberal firebrand to somebody who can regularly get 60 votes for initiatives in the Senate and 218 in the House and drive an agenda, and whether she can bring together coalitions for political victories. That's the challenge, and we'll see what happens.
Sadiq Khan, the mayor of London, has made some powerful opponents.
He doesn't know me, never met me, doesn't know what I'm all about. I think they're very rude statements, and frankly, tell him I will remember those statements.
My message to Donald Trump and his team is that, your views of Islam are ignorant.
He's the first Muslim mayor of a major Western capital and proud of it. This is how Sadiq Khan went from the son of Pakistani immigrants to a lawyer, lawmaker, and now the mayor of London. Khan's parents emigrated from Pakistan. His father was a bus driver, his mother a stay-at-home seamstress. The 10-strong Khan family squeezed into a 3-bedroom flat in South London. He wanted to be a dentist, but TV in the 1980s convinced him otherwise.
Objection!
LA law, with its swagger and ill-fitting suits, caught Khan's eye. He graduated in 1991 with a degree in law from North London University and joined a human rights firm. Khan worked a number of high-profile cases, often clashing with London's Metropolitan Police Force. But he had bigger political ambitions.
This is what being a new MP is like, squatting on a bench in the absence of an office, dealing with letters from constituents.
Reports are just coming in of an explosion here in London.
And there's just explosions, and then it was just smoke everywhere.
Everyone's just asking what's happened.
Only 2 months after Khan entered the Commons as a Member of Parliament, London was attacked by Islamist extremists.
That day will stay with me for the rest of my life.
He spoke out against the attacks both as a London MP and as a Muslim.
He has been very clear about his opposition to violence, opposition to terrorism, and has set out to make the case for a more open and peaceful Islam.
That's Thomas Penny, one of Bloomberg's Westminster correspondents.
Here is a man who is a Muslim, and he is standing up and being open and straightforward and being clear that the problem here is not Islam, but it's Islamic extremism.
In 2015, a decade after the attacks, Khan ran for mayor of London, and his faith was back in the headlines. His opponent, Zach Goldsmith, trying to link Khan to radical Islam.
The debate got again personal and nasty. The Goldsmith camp has called Khan extreme and accused him of associating with, quote, those who seek to do our police and capital harm.
It's a pattern of behaviour.
Even the former Prime Minister David Cameron repeated the allegations.
He shared a platform with Sajil Shahid, the man who trained the ringleader of the 7/7 attacks and accused the United States of bringing 9/11 on themselves.
But the smears didn't stick.
Zach Goldsmith ran a very negative campaign that was based on what people knew was a lie.
This election was not without controversy. And I'm so proud that London has today chosen hope over fear and unity over division.
After taking the mayor's office with a comfortable majority, Khan has brought a business-like efficiency to the role, scrapping expensive vanity projects like the Garden Bridge and the new Routemaster buses, which cost £350,000 each. The former lawyer who used to fight the police in court is now praised for his close relationship with them.
I was talking to a very senior police officer in the Metropolitan Police who said there was a sea change when he went into City Hall, and the police were saying how much they welcomed this because they knew where they stood and it was more straightforward to work with. So he works like a lawyer, he works like a government minister.
Khan's kept his faith at the fore. He's an outspoken voice for moderate Muslims across the world.
Donald J. Trump is calling for a total and complete shutdown of Muslims entering the United States.
Now, by giving the impression that Islam and the West are incompatible, you're playing into the hands of the extremists.
The ongoing spat between Khan and US President Donald Trump escalated when Trump went after Khan, misquoting him on Twitter just hours after the terrorist attacks of June 3rd, 2017. Khan's now one of the most prominent Labour politicians in the UK. In fact, a recent poll of Londoners found Khan was more trusted to keep the country safe from terrorism than the Prime Minister or the Labour leader. His story of going from the son of an immigrant bus driver to the mayor of one of the greatest cities in the world plays well with Londoners. But can he appeal to the rest of the nation? Has Khan got his eye on the top job? And is the UK ready for a Muslim Prime Minister?
What does it take to change the world? A big army? A cure to a pandemic? A revolution? All of these take either a lot of people, thousands of hours, or massive amounts of space. But for Julian Assange, all he needs is one room, an internet connection, and the world will listen. Assange is located here, and more specifically, right here. And from that location, he's posted government secrets, classified documents, and leaked emails from some of the world's most powerful people. And in doing so, has been labeled a hero, a villain, a nihilist, and everything in between. This is how an Australian programmer sequestered in the Ecuadorian embassy in London became one of the most influential and notorious people in the world. Born in 1971 in Townsville, Australia, Assange has always been on the move. Living in over 30 homes by the time he was in his mid-teens, Assange, along with his mother and half-brother, finally settled down in Melbourne. His introduction to hacking started at 16 when he was given a Commodore 64, which he attached to a modem. He attended the University of Melbourne, where he studied programming, physics, and mathematics. He never graduated, but that doesn't mean he didn't get an education. By 1991, Assange hacked into the Pentagon, U.S. Navy, and other branches of the U.S. government. In 1996, he was caught by the Australian Federal Police and charged with over 30 counts of hacking and computer-related crimes. He didn't get any jail time, but he was fined $2,100.
I think the first taste of what would come later was the hacking that he did as a young programmer, and that really sort of foreshadowed a healthy skepticism of the use and abuse of technology by governments.
That's Vernon Silver.
I'm a reporter for Bloomberg's investigations team.
Assange's youth as a hacker laid the foundation for him to start WikiLeaks in 2006. But what is WikiLeaks? It's a website that posts unfiltered, usually classified documents. What separates it from every other media outlet is that they have no editorial hierarchy. With a publication like the New York Times, information comes in, they take that information, package it, then disseminate it for the public to see. WikiLeaks, however, cuts out the middleman.
WikiLeaks gathers information, most of it given to them anonymously. So what they're doing is really very simple. They get the information in one end from who gives it to them and out the other with sometimes minimal interference. Julian Assange is the leader of that, the mastermind, the creator, and really, because he thinks of it as a journalistic enterprise, the editor-in-chief.
But every story starts with a source, and Assange has some unconventional sources.
Julian Assange does not hack as far as we know. He is the recipient of people who are either insiders who give him secret documents or hack emails from a foreign power.
That's Eli Lake.
I am a columnist for Bloomberg.
And there was no source bigger for Assange than Chelsea Manning, who used to be known as U.S. soldier Bradley Manning. In 2010, Manning provided Assange and WikiLeaks with hundreds of thousands of leaked government documents. WikiLeaks quietly began releasing the documents in February of 2010, then made big headlines in April by posting what is now known as the collateral murder video.
Come on, fire!
It was a vivid, graphic video. It changed the debate on the Iraq War, and importantly, it put WikiLeaks on the map when they put it online, and they couldn't be ignored at that point.
And those leaks were just the beginning. They went on to post more than 90,000 leaked documents known as the Afghan war logs, 390,000 documents known as the Iraq war logs, and 250,000 private messages between diplomats called cables in what is now known as Cablegate. These leaks were met with very real ethical questions.
The problem with publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the U.S. government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped in the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons, in all fairness.
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks.
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government, and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll